going live.
Excellent.
Thank you.
Is it being live streamed or?
Yes.
All right, call the meeting to orders of the December 2021 work session for the Command City Council, City of Frostburg. We'll call them right.
Commissioner Donnie Carter.
Here.
Commissioner Nina Forsythe.
Here.
Commissioner Kevin Grove.
Here.
Mayor Robert Flanagan.
Here.
And Commissioner Adam Ritchie is by phone.
Here.
Yes.
There he is.
Thank you. The first thing on the agenda, Mayor, is just a summary of a closed session that was held last work session. This will be incorporated into the minutes of the council meeting, per the Maryland Open Meetings Act. Your first presentation today is Mr. Lukas Ray. He's with the Appalachian Forest National Heritage Area.
Good to be here. Good afternoon. I'm Lucas. I'm the Communications and Partnerships Manager with the Appalachian Forest National Heritage Area. Does anyone know what the Appalachian Forest National Heritage Area is? If not, then I will do a quick brief overview. So many of you don't know, but you are currently in the Appalachian Forest National Heritage Area. The National Heritage Area is an area in the United States that is historically and culturally significant to the United States. There's 55 of them in the country. We're the 51st. It takes an act of Congress to become a National Heritage Area. So ours starts down in Greenbrier County, West Virginia, and goes all the way up to Cumberland, so Allegheny County and Garrett County are our two that are in Maryland. What a National Heritage Area does is work to promote whatever they see fit within the region. So ours is promoting heritage tourism, conservation issues, and just also just regular tourism in our region. So we're a nonprofit. We receive technical support and funding from the National Park Service, but those funds are ours to manage, and then we also match those with other federal grants that we receive. And so I have an annual report for you all, just know more about us. But we're here today because one of our major projects we're working on right now is our Pollinator resolution. And for that, I'm going to pass it on to our American member, Haley Tree, who's working on that, and tell you more about that.
Hi. So the Pollinator Initiative came about in 2019. It was one of the big focuses to have one of the projects for the organization. So they had AmeriCorps come in last year. It was the very first AmeriCorps to work on the project. And she mainly just started out with trying to just get the name out there, what we're trying to do, and got a garden established to just bring light to the situation. My job coming in this year is to, one, have community outreach and just let communities throughout the region know what our Pollinator initiative is, and to have these communities take the pledge and just saying, yes, I support, the reintroduction of native species, help with habitat fragmentation, and then also education from working on public handouts to have across the region. So like I said, pretty much the goal is to reduce habitat fragmentation, which has been occurring more and more over the past several decades. Species like monarch butterfly, rusty patch bumblebee, and a host of other bees are in severe decline in our region. So we're just bringing light to these issues and then just hoping that these communities acknowledge that there is a problem, and just if you're working in projects to better the environment in your community, to go ahead and consider planting these native species to help reduce habitat fragmentation.
And so with that, what we're doing is going around to all the municipalities and organizations that are in our region and asking for them to support our Pollinator resolution. There's nothing that you have to pay or do or get. It's just saying, yes, we as the city of Frostburg, support the work AFNHA is doing to support pollinators in the Appalachian Forest region. And so what I brought here today, and you don't have to do anything today, you can take time to think about it. I'm just going to leave them here, is our resolution, our pollinator pledge form, and then also just for a sample, it's the resolution that the city of Elkins, where we're headquartered in West Virginia, passed, saying that they support our pollinator initiative. So that is why we're here today, and if you have any questions, we'll answer them.
So your Pollinator initiative is it involves like getting groups to plant native.
Right, so the idea is in the future that we can use, everyone who's signed on the support resolution as a way to leverage some more funding to help develop, pollinator gardens throughout the region that community groups would plan to take care of, future generations to enjoy. Also, educational outreach resources. We're planning different, throughout the region, educational workshops, to teach even children about pollinators. And then also,
So you would provide some of that education?
we do, right. I was working on some of those things as well. We're hoping to get printed off in the spring. And then host annually or biannually a pollinator conference for our entire region with professionals in that conservation field who can speak about some of the pollinators, but also different issues surrounding invasive species versus native species in our region as well.
If this group has any problem with it.
I know.
And I'm going to leave this here and it's just one copy for y'all, and then either just our annual reports. I think I have enough one for everyone, so I'll leave those here for y'all. And if you guys ever have any questions, our email address is in there.
Would you like this to be a resolution at next week's council meeting?
Sure.
Okay, so once
Take
that,
care of it next week.
yep, we'll pass it next, we'll get it on the agenda for them to pass next week, and then I can send you that and the pledge form.
Perfect. Thank you so much.
Thanks all for your
Thank you.
I hope you have a happy holidays and happy World War II.
All right, thanks a lot for coming. That was a long trip for 10 minutes.
I'm used to it. I drive all over our region, so.
We'll
They
stop.
travel back.
Have a good meal.
Thank you.
Shop small and frost.
Mhm.
So by force.
Mr. Keith.
Well, good afternoon. For those of you who don't know me, my name is Keith Rhodes. I'm the audit manager or audit partner at ADJOURNMENT Company. I ran the audit for the city of Frostburg this year for the last several years. What Elaine and I passed out this afternoon was a financial report and 2 letters. And I'd like to just touch briefly on the letters and then go over to the audit report. So, with the 2 letters, let's start with the one that has a date at the top. It's not that one, it's this one, just with the December 9th date at the top of it. So both of these letters contain required communications with governments. They are mostly boilerplate letters that don't change from year to year. The letter that with the date at the top is called a SAS 114 letter. And it just kind of highlights some things about the audit. The one, it says there were no new accounting policies adopted this year. Next year, it will not look that way. As Elaine can tell you, there's going to be some new lease standards that will go into play. All any leases that the government is involved with will then be shown as a liability, as an asset and a liability on the balance sheet, similar to purchasing something with a loan. That's a new standard that will go into play next year. The next page, it just says there were no significant difficulties in dealing with management, no disagreements with management during the audit. And then further back, there's journal entries, and we're required to show you these journal entries. Elaine has looked at all these journal entries, but the first entry says a list of uncorrected misstatement on there. It's the first white page. That was just an adjustment that we found during our audit procedures that we did not make. Okay, we proposed it to Elaine. Elaine's, we can't make that decision. Elaine has to make that decision, but we were fairly far along in our audit process, and we don't consider that amount of money to be material to the financial statement. We've not changed a reasonable user's opinion of the financial statement. The other series of entries are adjustments that were made by Elaine after she gave us a trial balance for additional things that need to be adjusted, as well as journal entries to convert from the two different bases of accounting that the financial statements have to be presented on. So that's the extent of those, and if somebody wants me to get into the details and explain these entries, I'd be happy to, but,
Ronnie, any questions? Ronnie's good, we're good.
The next letter is the report on internal control over financial reporting and compliance. So when we do a government audit, we look at the internal control over financial reporting so that we can understand how the controls work, and we design our audit procedures based on those controls. So an area that we may determine doesn't have as good controls as another, we may perform additional audit procedures on it, look at it with a little higher level of scrutiny. That is our obligation, that's what we're required to do with a government audit, is look at controls like that. If in looking at those controls, we determine that there's a control that's not functioning as designed, then we have to report it. And we first identify whether it is a significant deficiency or a material weakness or just a control deficiency. Control deficiency is a very minor issue that's not required to be reported to management in writing. You know, it may be something that we encounter during the audit, and I say, maybe you may want to consider X, you know, whatever it may be. I don't remember saying that this year. But then a significant deficiency is more significant, and we have to put that in writing. And then a material weakness is something that's fairly big, and we have to put that in writing as well for management to look at it and be aware of it. The other thing that we're required to communicate is any instances of non-compliance with any laws, regulations, grant agreements, things like that. So during this year, you guys received some funding from the CARES Act, okay? And that CARES Act came out, you know, in July, August of last year, September. It was kind of, you know, as the government did, they threw it out there rather quickly with not a lot of guidance. That money was passed through from the county to the city. The county also didn't provide a whole lot of guidance because it wasn't available, okay? So, when we looked at that grant for compliance, this year, in looking at the federal regulations that are available for us to look at now, we raised the question of whether or not some of that funding was used in accordance with the federal regulations. We spoke to Elaine about it. The county's aware of, you know, the county has looked at it, the county's comfortable with the way the city is handling it. As I mentioned to Elaine, I feel like we are required, based on what our finding, and our finding is, it's there, it's on the last page. You know, I feel like when we report, as I told Elaine, you know, based on what we see, we have to report this as a potential unallowed cost, okay? It's up to the pass-through entities and that to pursue it if they feel like they need to pursue it. And the county has already said they're okay with it. It's not material. But the issue in question was, there were, bonuses issued to, employees with the CARES Act funding. And the guidance, in the Federal Register says that you can't use this funding for employee bonuses across the board. As part of our finding, we included a recommendation as well as a view of the responsible official and plan corrective actions, which we obtained from Elizabeth and Elaine. And our recommendation was simply, we recommend that the city seek guidance directly from the federal government's websites when federal funding is received through a pass-through entity to make certain of the compliance requirements related to the funding. Sorry. And I know you guys had a lot of funding, from the CARES, it's actually not the CARES Act, the rescue plan, but, so just caution you, make sure you follow any of the guidelines with that, and, you know, any questions that you have, if I can help you out with that, I'd be happy to try. Okay? Is there any questions on that? All right. So if you go to the bound report, the financial report. So this financial report is all yours. It's all based on information that's been provided by the city. Okay? The only thing in this financial report that is ours, Michael's, is the audit report. Okay, it's the third page in, it's 3 pages. This is called the Independent Auditor's Report. And the auditor's report states that management is responsible for the preparation and fair presentation of the financial statement. And our responsibility is to express opinions on these financial statements based on our audit. And then the next page states our opinion. It says, in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, business type activities, and remaining fund information of the city of Frostburg as of June 30, 2021. This used to be called an unqualified audit report. It's now called an unmodified audit report. It's the best audit report you can get. Okay? All right, we can go to page 16. Touch on some of the highlights of these statements, and then you can go to your other areas of your meeting. So, page 16 is the statement of net position. In the for-profit arena, it's a balance sheet. Okay, your government financial statements are presented on 2 different bases of accounting. One is a full accrual basis of accounting, and the other one is called a modified accrual basis of accounting. For-profits, public organizations, like public companies, they prepare their financial statements on a full accrual basis. Okay, this is a full accrual basis balance sheet. It shows your assets, all your liabilities. So if we can look down our current assets for the year for both the governmental activities and the business type activities is $9,239,000. Okay. Overall, our current assets are down by about $1.1 million from last year. That is the result of a draw on the bond that the city took out. There's a large portion of that bond that remains in the accounts receivable balance there of $2.4 billion under the governmental activities. Our capital assets increased by about $2.9 million over the prior year. There was $3.3 million for the municipal center, $2.1 million for phase 9 CSO project, less depreciation expense of $2.3 million. So overall, the assets of the city increased by $1.8 million. So that's a favorable thing. Current liabilities, a little bit further down, increased by about $550,000. So another good thing. Okay. Non-current liabilities decreased by $550,000. So our total liabilities went down $1.1 million. And then if we would take all the assets and thus the liabilities of the city, what we would have left is our net position, which the total net position of the city is $41 million, which is an increase of about $3.1 million over the prior year. All right, we can go to the next page. This Statement of activities, this is an income statement. Okay, it looks nothing like an income statement that most people are used to seeing. They're used to seeing revenues minus expenses and income. This is the approach that the GASB, the Government Accounting Standards Board, requires us to present. I think it's called a net expense model, where it shows the expenses first on the left-hand side. And again, this is on a full accrual basis. So the governmental activities, the expenses were $5 million. They are up about $230,000 from last year. Okay, a lot of small increases and decreases make that up. Nothing really big stands out about that increase. The largest increase is payroll, was up about $100,000. But again, there's some decreases as well. Kind of further over on the same line, capital grants and contributions, $1.5 million for the governmental activities. That is up about $1.3 million from last year. That money is largely made up of some grants for the municipal center as well as the Center Street projects, those property acquisitions in Center Street. A little bit further down, business type activities. The total business type activity expenses were $4.6 million. They were actually down about $134,000 from the prior year. And the next column over, charges for services, that's the rate, water, sewer, garbage, water surcharge, sewer surcharge. $4.9 million. That is an increase of about $564,000 from the prior year. Okay, there's a rate increase during the year, as well as a lot of consumption increases. And then we have the general revenues, just some general revenues that kind of support the overall operations of the city. The first line, net property taxes, $2.755 million. That's about $154,000 up from last year. Further down, miscellaneous revenues, $262,000. That's an increase of about $207,000 from the prior year. That is the COVID money that we talked about previously, as well as the $80,000 the county forgave that was originally a loan or a grant for the office keep, but they agreed if we used it for the Center Street, that they would be forgiven. And then you see the gain loss on disposal of fixed assets, so a loss of $241,000. That's kind of a paper loss, if you will. That is the result of selling the off-peak building for less than what it was purchased for, as well as a removal of some old paving projects that have been on the books and were depreciated over a significant period of time. And Elaine's talked about that, maybe changing an accounting estimate to reduce the useful life of the paving projects based on what the roads are actually holding up for.
Very true, Roger.
Yes. Are there any questions on that? Okay, we can go to the next page. The next page is just the general fund, the governmental activities, the general fund and the special revenue fund. I mentioned, there's two different bases of accounting, full accrual and modified accrual. This statement is on the modified accrual basis of accounting. This is what governments, when I first got into accounting, this is the only way the government presented their financial statements. It's much more basic, much more easy, and quite frankly, much less work. So if you look on this, you'll notice that there's no fixed assets and there's no long-term debt. Okay, so fixed assets are reported as capital outlays as an expense on this basis of accounting. Long-term debt, when you receive the money, it's reported as income. When you spend the money, when you pay it back, it's reported as an expense. Okay, so this balance sheet is of the general fund and the special revenue fund, based on there being no fixed assets and long-term debt reported. Under this basis of accounting, the total assets actually decreased $1.5 million. The reason for that is again, the draw on the municipal, there was some draws on the municipal center, from last year to this year, as well as using, some funds that the city had kind of set aside, to help pay for the municipal center. So that makes up the decrease of the assets on this one. Total liabilities, about halfway down, went down, at the end of June, it's $412,000. It's a decrease of about $147,000, so again, a good thing. And then further down, we have fund balance. For the general fund, $5.681 million. That's a decrease of about $1.21 million, and I'll explain that next. But we take essentially the current assets of the government, of the general fund of the city, less the current liabilities, that's what we have left. And you can see there under the fund balance, restricted capital projects, $1.18 million. That's the money that's left of the bond that's not been drawn down or spent yet. Any questions? Okay. So the next page is, I've talked about the two different bases of accounting. All this next page is a reconciliation of them. I take the fund balance from the one basis, that's what the 5.7 million at the top is. Reconcile the differences between the two. And at the bottom, I end up with the net position of the general fund of the city, or of the governmental activities of the city, I should say, of $15 million. So that's just reconciling the two bases of accounting. We can go to the next page. This is the income statement on the modified accrual basis of accounting. Okay, this is where we can see during the year there was no proceeds from long-term debt, but there were some payments. So about halfway down under the expenditures, you'll see debt service, principal and interest and issue costs of almost $150,000, $49,000 principal and interest and issue costs of $100,000. So we're showing loan payments as an expense, and then you see capital outlays there of $3.6 million. That's where the costs of the municipal center that you incurred in 2021 are reported. So you've got the municipal center there and the Center Street property. So capital outlays on this basis of accounting is showed as an expense. That's the reason for the decrease in the fund balance, or the net loss, if you will, for the year of $1.2 million. It was investment in infrastructure and buildings. Okay, if there's no questions on that, and I'm just going to touch base real quick on the next page. That is the reconciliation of the net income between the two different bases of accounting. Similar to the reconciliation for the balance sheet. I start with the net income or net loss from the previous page of 1.2 million. Add back the capital expenses, the capital outlays, because they are additions to, the assets under the full accrual. Subtract out depreciation, just kind of go down through, and, we're left with 1.4 million of the net change in position to governmental activities, a positive, which is what the full accrual basis financials show. We go to the next page. The next page is essentially 4 balance sheets for the proprietary funds: water, sewer, water surcharge, and garbage. In the far right is the total of those activities. Total assets for the year increased by about $551,000. $357,000 of that was increase in cash. Okay, and the increase in fees, revenues charged. The remaining portion was largely attributable to asset acquisitions, the completion of the sewer project and the progress to date on the other projects. Total liabilities, for all the funds, all the proprietary funds combined, total current liabilities, 1.4 million, a decrease of about $326,000. Total non-current liabilities, which are compensated absences, a pension liability, notes payable, and include post-health employment, health insurance, 4.7 million, a decrease of about 700,000 from last year. So total liabilities decreased by a little over $1 million from last year. So, another positive. You can go to the next page. Next page is the income statement by each fund. Total revenues, operating revenues for the year for all the proprietary funds increased $564,000. Total operating expenses decreased by $26,000. So again, favorable. Further down, you'll see a change in that position, about 2/3 of the way down. That's the net income of each fund. Okay. Overall, proprietary fund net income increased by about $618,000 over the prior year. So again, all favorable. We can go to the next page. The next page is a statement of cash flows. A lot of people don't like that statement. A lot of people don't understand what that statement is showing. That's showing where your money went, or where it came from. Okay, we take your receipts from the customers, your payments to the vendors and employees, purchase of assets, payments of debt, things like that. And about halfway down, you see net change in cash. And on the far left, it's $397,000. $393,000. That's your increase in cash for the year. And that top part just kind of shows, here's how we got, how we got from last year to this year. This is where the money went. Any questions on any of that so far? Okay, we can go to page 53. Page 53 is the statement of revenues, expenditures, and changes in fund balance, budget and actual. And they say, well, that's great, how we did, how's it compared to budget? How did we do compared to what we said we were gonna do? And that's what this statement is showing. This is showing your original budget, your final budget, and your actual numbers on a budgetary basis for the way that you prepare your budget. About halfway down, a little below halfway down on the revenue side, you see grant income other. There was, in the budget, there was $3.366 million budgeted, and the grant income for the year was $1.986 million. So, about a $1.3 million less than budgeted. And the next page, Elaine describes the budget variances and the reasons for the budget variances. What she indicates was there were some administrative delays experienced with the state agencies, with eligibility requirements, and that's why your grant income was less than what was anticipated. Under the expenses, you can see that, your total budgeted expenses were $8.1 million, and your total actual expenses were $8,076,000. So, out of an $8 million budget, your variance was $29,000. That's pretty good. The admin budget was $4.5 million. Your actual budgetary, your actual expenses for the admin were $4.682 million, for a negative budget variance of $172,000. The largest reason for that is just some overages on the estimates for the municipal center. Any questions on that? All right, well, that's all I have. I'd like to thank the city and Elaine and the entire staff, and they're a pleasure to work with. They are very prompt in getting us the information. There's a lot of information here. We asked a lot of Elaine and Elizabeth and the staff, and we do certainly appreciate the efforts that you guys put in to help us out.
We're very happy. That's a very good report.
It should be. It's very favorable for the city this year. It's a good year.
I appreciate Keith and his team and the relationship that we had for many years working through a difficult contract.
Well, thank you very much.
Thank
Have
you.
a happy holiday. Take care. Thank you.
Thank you very much.
And thank you.
Thank you. Good news.
I don't have any attachments for this. In the closed meeting last month, I presented 2 different properties for your consideration for acquisition. Those offers were made as discussed, both owners accepted. The property we were looking to purchase for expansion of our water system, we're not ready to enter into a contract because of some estate and ownership issues that need to be cleaned up. So Michael Cohen has advised those owners to remedy that before we can proceed. So once that's ready, I'll bring that back for your consideration. But this property is a single-family property that is on Bowery Street and needed for the roundabout construction. Allegheny County has verbally committed to reimbursing us for the purchase price, as well as giving us an additional, $12,000 towards demolition. So this resolution would be to require that person enter into a contract and authorize me to execute the closing documents. In talking to that owner, she'd like to wait about 6 months until her new home in Frostburg is ready before closing, so she didn't have to pay for storage and all that. And we're not doing any construction in 2022, so it works out fine. But she was happy to enter into a contract, so Michael was drafting that contract now. She accepted the offer at appraised value. The next one is just the next phase of design for the CSO project. This one, that's what I forgot on the agenda. No, it's not. It's on there.
So
Never
they're
mind.
both on.
Sorry, it's down later. This one is funded 87.5% grant through the state. So Hayden, do you want to talk about this? It's a smaller project, so the design cost is less.
Yeah, this is 10A, it's right below Mountain Ridge. Very, very little ground tear up with any of this one, it's all pipe lining project, but it will, in my opinion, probably be the most impactful project in terms of getting the most bang for our buck, because it's gonna be cheap to do, and it's gonna take out a lot of water infiltration. So this was kind of a no-brainer to get it done. The only thing that you'll really see torn up outside of Mountain Ridge, along where the tennis courts are, there is a sewer line that runs under the tennis courts, and we're probably going to abandon that one just because it's pretty hard to get to and not a lot of stuff goes into it. We're going to run a new line down the road there next to the tennis courts, hugging the ditch line. But other than that, it's just going to run through that wetland in the back, and really no tear up there because it's a wetland.
What is Ray's estimate for the design? When would you be ready to bid the project?
He wants to be ready by, he has to be too soon. I know pushed him on it so that he could get it ready, we could meet deadlines. But definitely by, I think the end of January.
Oh, wow.
Yeah, we've put a lot of pressure on. Cost wise, I did not. Yeah, that 39,046, yeah, so.
And so right around 40,000. We've been, the way the CSO projects have worked is we've used CSO surcharge revenue to pay for the design and the 12.5% match. And then, so our projects are ready to go when NDE funding finally comes through. This past year, in the midst of 9B construction, they changed everything and how they did reimbursements. And I know Laura and Elaine and Keith worked a lot on trying to sort that mess out. We haven't really gotten a great explanation. And then we'll talk later. Everything is kind of being turned on its head with CSO projects right now. But we think it's prudent to move forward with this one now.
Yeah, this one's in terms of CSOs, it's a cheap one, and we're gonna see probably the most returns as far as cutting down on our actual combined sewer overflows. So in my opinion, this is an easy one to get knocked out.
Is everyone okay with that as a resolution? Okay. Town and gown ordinance, when 3 years ago, the town and gown ordinance was enacted, and it was at the request of members of the SGA, and the mayor and council approved an ordinance to codify a town and gown committee. The ordinance you approved 3 years ago had a sunset provision, and it sunsets in January of 2022. So, the mayor and Chief Costello served on that committee, and it was their recommendation, as well as the 3 other members' recommendations, to re-up, yes.
Or continue with the agreement.
Yes, so, I will, if that's okay with you, I will make some minor adjustments with Michael, so that ordinance can be introduced at the December meeting. Any questions or concerns there? Okay. Deirdre from Frostburg First has requested a temporary repeal of the open container law for the Cocoa Crawl in January. That will be the 4th annual. It won't be advertised, but people can take their hot toddy or whatever out on the street with them.
Magical cocoa.
Oh, you're having adult cocoa with the cocoa?
We may look and modify
I think they
things.
fill up those cells though.
Peppermint shot.
No issues here.
Okay, so that's the resolution.
Get so easily distracted.
Okay, water department, this came about just this week. So back over the summer, when you approved the enterprise fleet leases, there was a few vehicles, the Durangos and the utility body 3/4 ton truck for the water department that could not be ordered because at the time, because the Dodge order bank for governments was not yet open. So the water department had spec'd out a Dodge and a Ford. The Ford order bank came and went, waiting on the Dodge because the Dodge has historically had the best government incentives. So it is usually the most cost effective to go with the Dodge. So the Dodge Government Order Bank finally opened a couple weeks ago, and they only opened it for 5 different kinds of vehicles, and the only truck was a half-ton truck. So the water department has a 3/4 or 1-ton truck that was the next one to be replaced, and I reached out to them and I said, how long can you wait? And they said, not really long, it's making some mechanical noises that we're not comfortable with.
It's pretty dangerous.
So, I reached back out to Enterprise and, I said, what else can you do? What are other options? And so they can order and the Dodge lead time is like a year, because, they make the least on the government vehicles, so although there's volume, it's not a priority. So they can order a Ford now through their retail channel. So this is the price you approved for the Dodge, and it was a monthly payment of $976. The Ford, he told me the high water mark would be $1,000 a month. So it's about, over the 5-year lease, it's $1,000 to $1,500 difference. And we'd probably spend that fixing the truck that they have now.
The 13's in the fund. 13. Yeah, the utility model.
Yeah, the old one, yeah. It's the one Jimmy G drives now. So, because this is an increased amount, I would need you all to authorize it again at a higher amount for the water department. If you would. Yeah, much better. 2 to 3 months for production and like 8 to 10 weeks for aftermarket. So hopefully within 3 to 5 months, we'd see it. No guarantees, because
But set it up. You know what's wrong with it?
Probably something like a head gasket or something like that, just wear and tear on an old truck.
okay, so that would be a resolution. Sorry for that long story, but I know the sales lead at Enterprise that we work with, it's like, this has been a horrible year to start a relationship with Enterprise, but he's been, but the Durango is ordered, so that's, you don't have to worry. And Lumpy's van has been ordered, and I forget what else was ordered this year, but everything else is fine. Oh, the street department ordered, and the street department's half-ton has been ordered. So.
Okay, good.
Okay, that'll be a resolution. Each year, the commissioner puts out a garbage and special collections memo, so everything is ready for public knowledge at the beginning of the year, so the dates have been selected in consultation with the street department and Commissioner Ritchie. And so that'll be an announcement Commissioner Ritchie can make next week at the council meeting.
Will it be a separate announcement of official holidays?
We
Because
could do
this
that.
was only affected garbage.
Because Karen made her holiday list.
I haven't seen it, but I know last year was the last minute Juneteenth.
Yeah.
So just clarification on what are the actual city holidays next year? Because we have to set them up at the beginning of the payroll year.
Okay.
I have to put those, if it's gonna pre-populate in ESS.
Okay. Sure. We'll put together a,
Doesn't have to be pre-formal, just like.
yes, we'll put together that, for your review, and then we'll publish it. Once you approve it, it'll be published by the first of the year for the public on our website. And then we can have it as well. But I assume based on your decision last year that you would include the Juneteenth holiday on that. Okay, Nina says yes, so I guess that's a yes.
Emperor today.
Yeah, he just absorbed the garbage control. We got you out of the cupboard.
I did look at that holiday.
Thank you.
No, I did look at that holiday, it will be on a Monday, I think. Okay. CSO 10B. Wah, wah. So this year, the city was listed on the intended use plan as a favorably ranked project, like we have been for many years in the past. However, instead of getting $1 million, what the city was offered was, instead of getting 87.5% grant dollars like we have for the past 4 or 5 years of grant funds in the years prior, we were given a WQSRF loan in which up to 50% of it could be forgiven. So it is a roughly $3 million project, and they are saying that they would forgive 50% of that. That does not include the bond issuance costs that we have to go through as well. Laura has talked to the folks at the state, and they have asked if we, they've told her that funding has been very competitive this year and is continuing to get more competitive.
Because people are finally starting to move on that.
I-
Yeah, a year ago, time
Yeah.
jump in, huh?
Well, and I think the big projects are like getting to a funding point now. You think about what Cumberland's spending, and when they opened up Bay Restoration funds to do sewer projects 4 or 5 years ago, they projected what they were gonna spend each year, and I think the most they ever were gonna spend each year was like $80 million. Well, when you're doing $2-3 million projects, that 80 million goes a long way, but when you're doing 40 and $60 million projects, that money doesn't go very far. So that's my guess, educated guess as to why we didn't get grant funding this year.
So the people who have done the right thing get punished for the ones that played it.
Potentially.
Liz,
Yes.
I mean, do you think the ARPA money has anything to do with that also? Because you can use it for some of those things.
I think the infrastructure bill might be.
Yeah, so, well, the ARPA money, we could use it for. I don't know if that's what affected our funding, because, these communities that got huge amounts of money also have the huge projects. I did sit on a call from, with some staff from Ben Cardin, Senator Cardin's office earlier this week about the about future earmarks. And they said that they will fund WQRSF projects that are ranked on the IDP, which our projects are. 100% funding could be earmarked for these projects. Now, the earmarks are very competitive, and we're fighting amongst, we're being ranked among all of the constituents, all the different jurisdictions in Maryland to try and get ours to the top. And I don't know that a standard CSO project would make it to the top, but that's definitely something to consider. The other thing to consider is Hayden has been actively, and I to some extent have been working with Aqua that you all agreed to hire collectively with Cumberland, LaVale, and the county to renegotiate the consent decree on the combined sewer overflow mandate to be done by 2023, which we're not gonna be done by. Hayden, about a month ago, sat in on the first official meeting with MDE with Aqua to start renegotiating that. So The other thing is the city isn't going to continue to get 87.5% grant funding going forward. It really affects the city's ability to commit to a time frame in which these projects can be completed. So there's just like a lot of moving pieces with the new federal monies between ARPA, the infrastructure bill, earmarks, what's going on in renegotiating the consent order, and then this.
I always feel, I hate to say, let's hurry up and wait, but at the same time, I want to get into a loan for $1.5 million on these projects.
Because 10 Bs is around $3.5 million chunk. That'd be a big loan.
And right now, we're in a good spot. If we need to make the 12.5%, we can cover that, no problem. But if we jump into a loan and 6 months later, oh, look, here's this 100% deal, you know, not to slow you down, but
Well, yeah, based on a variety of factors, that was the recommendation staff was going to make.
sorry.
No,
What's the holdup?
it's a relief.
I mean, I know we've had this continual cranking out of projects and we made really good progress, but I really have a lot of heart on putting us in debt for $1.5 million and then turn around a couple months later, will we ever do that? Because the bond issue and all the paperwork, no. Don't do it.
And this stuff comes up quick, but we do have somewhat of a backlog between 9C and 10A.
Okay.
So we've got 2.5 years worth of CSO work
And we're
to
good.
do.
And we're good.
And then we also have the other ARPA funded projects like the pump station, the
There's still
water,
just plenty
other
of work.
projects that Mike, our inspector, will be kept busy with.
Yeah, you can be running
I
around.
don't feel like we're stopping, right? Let's just slow down a little bit and get caught up on what we got.
The other thing that Laura ran into this year is like the way they eligible expenses. So we've always paid for specs engineering to do the design, and we haven't had to procure the design, we did not pay for it. But they've always paid for construction admin and other expenses, and now they're not gonna pay for any of that if we don't procure the design. And for $1 million project, it's not that big of a deal, but for a $3.5 million project, it's a big deal. So this would give staff time as well to figure out how to proceed.
Matt, you good? You slow down a little bit?
Yes.
Okay.
Okay,
I mean, I don't want to, but it looks like that's what we're gonna have to do.
so,
A couple months from now, we may have to be able to do something and go the other direction, but if you're okay with that, that's the way I'd like to see us all go right now.
Yeah, that's fine.
Okay.
and this is something that I think we would reapply for next year and present at PACE. And this is an opportunity to talk to all those funding agencies when we're at PACE. How do we make this work? What is your feel on this? Maybe they're gonna say, well, plan on applying to CDBG for $800,000, so your loan amount's less, or what, going forward, or just making sure we get better year.
Yeah, 6 weeks from now, something else might have changed.
Exactly. So, all right, so based on that consensus, Laura will let them know that we are declining the loan funds so another community can use them. Okay. Thank you. Ms. Bethany has an update for you.
Yes, so, I just kind of wanted to talk you through as we move into, the implementation side of our new iWorQ software, our, code enforcement and permit reports are gonna look a little different. So I just wanted to tell you what's on here, and if you have any recommendations for, additional information you'd like to see, that's fine too. Which one did you start with?
I want you to.
The case report? Yeah. Okay, so, moving forward, as far as code enforcement goes, you'll be getting 2 different reports now rather than 1. The case report is just a general, when the first action was taken, when they had to have it cleaned up by, the address, a brief description of what, code is being violated here, and then the status of it. So, some are resolved, and then, you'll see first warning, second warning, third warning, verbal warning if we just pick up the phone and call the property manager and say, hey, go pick up the trash in the yard, and then citation issue. So that's just a very general report, and then the case activity report, which is the second one that you'll receive. You'll see under activity type what we did. So inspection means that we rode by, saw it. Phone call or email, that is correspondence that we're having with a property owner or property manager or tenant, anybody. That would be filed as a phone call or email. Re-inspection is when a letter has been issued and we go back out to look at it. And then if it's resolved, we change the status to resolved, or if it's not resolved, send, or we do whatever action comes next. And then where it says send letter, that's the letters that have been issued, whether it be a first, second, and final warning. And then that's all for code enforcement. And then on permits, I've tried to keep this as close to what we used to do as possible. There's a little bit of difference, but basically the biggest difference is the status. So open means that we've issued the permit, it's been paid for, and inspections are ongoing. Closed means it's been paid for, all the zoning checks have been done, and everything's done with it. And then pending is we've received the application, but it either hasn't gotten through plan review yet, or it has not been paid for. So that's what these reports will look like moving forward. And like I said, if there's any other information that you would like to see in these monthly reports, let me know. There's a lot of different fields that we can pull in here, but I tried to build this as close to what we did before iWorQ as we could.
We have the ability to specialize as much as you want. And I think you can see the difference between those two code enforcement reports. You get a general overview of what we're doing, and you get a very specific view of what we've been doing and continue to do. So I think it gives you a better view into our day-to-day.
That's all I have.
Very good. What will tweak we know?
Yeah, just let us know what you need, because we have the ability to tweak. Thank you.
Great, thank you all.
Okay, the next one, right now, last month, Commissioners Forsythe, Grove, and Ritchie approved a rental housing license relief program. And as every month goes on, we find out why our ideas don't work. Sorry, I have a bad attitude right now about these ARPA funds.
Don't hold back.
So, just to update you, Elaine, LJ, Lydia, and I have been meeting, and Taylor as well. Elaine and I have talked to Keith to some extent about how to make a program work. We need to collect some data, so LJ and Taylor are working on a short, basic survey to document that rental housing is an impacted industry. And with that documentation, we will be able to offer some sort of grant program in the spring, late winter or spring. But the discount on registrations, we're not gonna be able to do, because that appears as revenue replacement, which is not an allowable use with the small business assistance category. So
So we're going back to the drawing board, and we're going to develop quantifiable data using the Maryland Department of Planning's Housing Element Models and Guidelines website. There's all kinds of data collected there for us to use for our comp plans, and Department of Housing and Community Development's Office of Research data, which has all kinds of housing data for us. We have to work on that to get it down to the local level. But what we have to do is prove that rental housing is an impacted industry with numbers. And we can do that. Exactly. That's the point. The whole point is the COVID impact. So,
Yeah.
you know, that's what we have to develop. And that's what we've started working on. based on, so those are two really good websites that we have available to us right now. And so we can use that data to start building our case. We can use, I can get in touch with Dr. Graham over at the university and see if he's got any kind of numbers he can share with us. We're looking to reach out to the district court, clerk of district court in Rosalie, and see if she's got eviction numbers she can share with us. I think when we start asking for information like this, we're getting into a fuzzy area of what's really allowed. Can they just give us some straight numbers without personal information? You know what I mean?
Yeah.
But it's something we're gonna work on.
Just enroll in line. Just put it on to run that news stories. That's all I written something.
Yeah, there have been some questions like, did the relatively new rule that the university instituted on freshman and sophomore requirements to live on campus, did that have an impact on the rental housing industry? We have to separate that out from COVID.
Sure.
So there's some work to do, but we're not giving up. I think you all know my stance on how the pandemic has impacted rental property owners. So we will find a way to support that industry. That's my stance. We just have to make sure we do it by the book, because, and I think Elaine would agree, we don't want to ever be in the position where we've done something inappropriate and now we have to pay it back. That's not helping anybody, so we'll make sure we do it right.
Maybe do it sometimes on our side. What do you think?
Okay,
No discussion?
yeah.
Anything else? Anything else? So you good? Adam, you good?
Yeah.
Okay, all right.
I just need someone to read the adjournment, should not be on there. I need someone to read the closing statement for a brief closed session.
On the end code around Article 3-305B1, a closed session may be held to discuss the appointment, employment, assignment, promotion, discipline, demotion, compensation, rule, resignation, or performance evaluation of appointees, employees, or officials over the public body with jurisdiction. A closed session is needed to review compensation for specific city employees. I need a motion second to go into closed session, please.
I move we return to closed session.
Second. Give a second, all in favor?
Aye.
Aye. Okay, gotcha.
Thank you.
Thank you, Elaine, again, very good report, thank you very much. Keep watching Coco, okay? Yes, sir.
Hey, I'm thinking that we could,